Good evening, everyone, and welcome to Public Allies. My name is Aisha, and I'm the host for today's webinar. Thank you so much for joining again. And it has been a wonderful, wonderful time. Throughout the year, we have done a lot of webinars. We have brought in a lot of speakers and guests who have enjoyed talking to you, and you have enjoyed listening to them. Thank you for all the love and support. We started Public Allies so we can help people with workshops, facilitate workshops for seniors and women and kids on mental health. But then due to COVID, we changed. We enjoyed helping small businesses as well. So we continue that journey. And today we are going to be talking about how to start a business and understanding the KPIs. To talk about that, we have with us Michelle Herscu. She is a CPA and business advisor. Welcome, Michelle.
Thank you, Aisha. It is absolutely wonderful to be here tonight. Thank you again for inviting me and for having me over. And I'm really, really excited to start talking about today's presentation.
Thank you. But before you do that, let me introduce everyone to who Michelle Herscu is. Michelle, like I said, is a CPA and a business advisor. She's worked in the corporate world for more than 15 years. Her last position was a CFO, and she started her accounting firm about a year ago, very slowly building it. And then she decided to transition to it full-time a few months ago. Her ultimate goal is to be able to assist as many businesses as possible by creating a supportive and educational environment. Her mission to change the boring CPA image. Let's see if you do that, Michelle. And she believes a lot of us are very reactive, showing up once a year for tax season, and don't pursue a proactive approach with our services, like with the CPA services, which is a complete opposite of her approach. Since September 2020, she's run a lot of webinars about tax and accounting for small businesses and has done multiple FB Live sessions on these topics. In her spare time, she loves hanging out with family and friends, enjoys good food, Netflix, and beach. That is amazing. So Michelle, where can we find your FB? Okay, you said FB Live, so we can find it on your page or on your personal FB. Where is it? Or do you have something else?
Sorry, Facebook Live, you mean?
Yeah, Facebook Lives. Is it on your business page, on your personal page? Where can we find?
Usually I do them on my personal page.
Okay, so go to her personal page and look at all the topics that she's covered after you've seen today's topic with us. Okay, here you go, Michelle. Please take over and tell us more about how to start a business.
Okay, amazing. Thank you so much, Aisha. This was such a warm introduction. Thank you. I appreciate it.
Oh,
thank you. And thanks, Public Allies, again for having me.
Thank you so much. Thank you so much for coming. You know, it is very easy to start webinars. It is very easy to start roundtables, but having people who understand, bringing guests who are experts in their field is the most difficult task. And when guests like you are so forthcoming and agree to help us out and help our listeners, oh, it's a wonderful combination, and we are so privileged to have people like you. Thank you.
Thank you. It is, I honestly believe it is my privilege. And also, happy Diwali for whoever is celebrating today.
Yes, happy Diwali, everyone. Yep, go ahead, Michelle. All yours.
Okay. So let's dive in. You just tell me if you can see my screen and if everything is okay. Okay, awesome. So tonight, as Aisha mentioned, we're going to talk about how to start a business and understand your business KPIs. That's not a topic that's being covered enough, in my opinion. So definitely now is a good time to talk about it. Okay, so I am, as Aisha mentioned, Michelle Herscu. I own MLHC, which is an accounting firm. And some of the services that we provide are business advisory, virtual CFO, tax filing, monthly bookkeeping, in-depth accounting review, and quarterly checkup. And before I start diving into all the material, I always like to have a little disclaimer because I want everybody to be aware that really this information is intended to provide just general knowledge. It doesn't take into account your personal situation or your corporation situation or company situation. And I always advise to consult with a professional. So please don't hold me liable for anything that I say today. This is really for your knowledge, and it should be used as a basis to understanding and taking it from that point onward and talking, like I said, to a financial professional. So today's presentation, we are going to cover a business structure and how to choose one, the business tax that pertains to each of these structures, a little bit about bookkeeping, KPIs with a case study, summary, and a quick Q&A. And before we start, quick question. Did you know that Canada actually has 1.2 million small businesses, and small businesses are considered businesses that have between 1 and 99 employees? And out of these 1.2 million, Ontario actually contributes 37%, followed by Quebec with 21 and BC at 16. So that's a really important piece of information that I like to share.
That's amazing, because there are so many small businesses, and knowing more about it, having continuous education and knowledge about it is the key, right?
That's true. That's true. Okay, so let's talk a little bit about sole proprietor versus corporation, a little bit about the pros and cons, and when should you really consider incorporating. So some of the pros of starting a sole proprietor is really that there are very low startup costs. If you are to end up registering a sole prop, then it's about $60 in Ontario. And you have more freedom in terms of regulations. You don't have to keep super tight books because they're not viewed exactly the same as a corporation. So it's really just the income statement that matters in this case. Some of the cons of starting a sole proprietorship is that you do have unlimited liability, which means that you are the business. And so if there are any issues, let's say with outside suppliers, they could potentially come after you personally and after your personal assets. So just keep that in mind. You do not have name protection. So even if you have, if you register your business with a master business license, so let's say Bob's Flowers from Toronto, okay, that's the name of the business as a sole prop. There can still be other Bob's Flowers from Toronto, even if you have the master business license. And lastly, it's usually more difficult to raise capital when required because of the way, let's say, the lenders perceive sole proprietors. So again, just keep that in mind. I've heard of some issues with people who are trying to get mortgages. It's a little bit difficult, not something that cannot be done, but just keep that in mind. And in terms of the corporation, so really some of the pros are that it is limited in its liability, because if there are any issues, then usually they would come after the corporation's assets. There are some other possible tax advantages, and this is very important to know. Starting a corporation, it really depends on your personal requirements in terms of how much money you need personally to live on. So if you're making, for example, $100,000, your net profit, but you only need 50, I would say probably start a corporation, because you can leave the rest of the money in the corporation and defer your taxes for the future instead of paying tax on the full 100 as a sole prop. Another advantage is that it's usually easier to raise capital as a corporation. You do have name protection here. And like I mentioned, it is easier to control your personal income. And then some of the cons with a corporation would be that the setup fees are higher. If you do want to incorporate, there are options online that can go from, I think, $400. But if you are using a lawyer, which I personally always recommend, it can be $1,200, $1,500, really depends. So keep that in mind. The tax filing is definitely more complicated and costly. It's not just a small like sole prop. It does take a lot more work compared to a sole proprietor, which is why it's more expensive. It is closely regulated by government and CRA, and of course the record keeping is more extensive, and the financial statements, it's not just the income statement, now comes the balance sheet in place as well. That's another whole set of financials that you need to keep track of. So when should you really consider incorporating? I would say there are two general guidelines, which I've already mentioned briefly. So the first one would be from a legal perspective, so to limit your personal liability. And then the second one would be from a tax perspective. You can really control how much money you withdraw from the company. So you just get to defer tax. And I just really want to stress out this point. It doesn't mean that you pay less taxes. It just means that you get to defer it, because you are going to pay taxes on whatever you withdraw, even if it's now or in the future. So keep that in mind. In terms of the tax requirements, the tax filings, so there's the T2125, which we're going to talk about shortly, and the T2, which is the corporate tax return. So the T2125 is, it's called Statement of Business or Professional Activities for sole prop only. It is used for reporting business income and expenses for sole proprietors and partners in a partnership. Any person with additional income must report it on the T2125. So FYI, if you are driving Uber as a side hustle, that is considered an additional income for that you need to report on the T2125. And if your business is not registered, you still need to fill out the form. If you remember, I talked about registration. Registration is required for sole props if you are not using your legal name. And you will need a separate form for each business. So if you drive Uber, but also sell soaps online, then these are two separate businesses. You need two T2125. And just kind of like give you a quick screenshot of what it looks like. This is the first part. It's around 6 pages long. This is part number 1. The other, sorry, before I jump to this, the other tax return that is required is the T2, and this is for corporation. I didn't bring a screenshot here, but like I said, if you have a corporation, then you should be using the T2, the corporate tax return. And like I said, it is more complicated. I do recommend not doing it by yourself if you don't have any knowledge in accounting, or if you haven't done any tax returns before. Quick question. Did you know that many business owners decide to skip bookkeeping or try to do it all themselves to save costs? But I do want to tell you that some of the results might include cost savings in the short term, but a lot of expenses in the future. Okay, and that's something I see over and over and over again. And trust me, trying to clean up the mess that some of the business owners do, or even unknowledgeable bookkeepers at the beginning of their way, that's going to cost you a lot of money. And a lot of the bookkeepers are still charging hourly. So if they need to clean up messes, you really should be hiring someone from the beginning instead of trying to do this yourself. Now, why do I always say that bookkeeping is so important? And also, what is it? Okay. So the definition is really the activity of or occupation of keeping records of the financial affairs of a business. What does it include? So it includes recording funds coming in, okay? So making sure they're showing under the right customer and the correct revenue account. And then recording money going out, the right date, the right vendor, the right category, reconciling the bank account, the credit card, the loans, the lines of credit. So important. And of course, the last stage is to produce the financial statements. Now, the reason I say it's really important is because proper bookkeeping gives companies a solid overview of their performance. This is the backbone of each company, okay, of each business. It gives you information that allows you, the business owner, to make strategic decisions. If you have the wrong financial information in the books, you will be making the wrong strategic decisions for your business. I cannot stress this enough, okay? And it's obviously also the basis for preparation of tax returns, personal and corporate. And again, you cannot run a business without keeping your books in order. And really, Excel, if you are a corporation, please do not use Excel. Use an accounting software, and I'm going to be talking about that really briefly at the end, because there is at least one option that I'm aware of that's free. Okay, so it doesn't have to cost money. Just use an accounting software. Okay, so now that I've told you about bookkeeping and why I think it's so important, I want to jump into KPIs, which stands for Key Performance Indicators. You cannot do that without having a set of clean books. Okay, so going back to the bookkeeping, like I said, this is the basis for everything. So the definition of KPIs, of key performance indicators, is outcomes your business needs to measure that have the most impact, moving your organization towards its vision of success. And KPIs are not just financial, because they can relate to sales, they can relate to operations, they can relate to marketing. There's so many other categories that it falls under. So for example, you have monthly website traffic, so that would fall under marketing. Employee satisfaction rating, that you would want to measure, that falls under operations. You have gross profit margin, which I'm sure you've all heard about, that falls under financial. Another measurement would be number of new contracts signed per period. Okay, so these are all things that I would always recommend measuring for a business. And of course, not everything pertains to all businesses, because every business is different. Some of them are service providers, some of them have products, so it really depends. But what I do want to talk about today is give you a study case for financial KPIs. And as an example, we're going to say that you are a business owner of an e-commerce store selling candles. Very simple. And today, everybody seems to be having an e-commerce store. So these are the current stats that we have. So we know that your annual revenue is $150,000. We know that the gross profit margin is 60%. Okay, which means the revenue minus the cost of goods sold, the percentage from the revenue, and then the inventory turnover is 3. And that means that 3 times a year you sell off all your inventory. So you would like to increase your annual revenue by 20%, so from 150 to 180. The gross profit margin you want to increase to 65%, and the inventory turnover to increase to 4%, because the higher it is, the more sales you're going to have. Okay, so Again, this is an example for financial key performance indicators. And as you can see, it really depends on the type of business. Because usually if you're a service provider, then you're not going to have a gross profit margin because you don't have any cost of goods sold. It's just services. Okay, so the revenue, which represents the sales, would be the number of candles that you sold multiplied by the price. So really there are three main ways, I should say, that increase the revenue. You either increase the numbers of candles that you sold. Okay, so for example, you put more money into advertising, you use social media, you increase the sales price, or you do both, which is the best. So in the current year, I was just using it as an example. We sold 10,000 candles at $15 per candle, which brought us to $150,000 in revenue. And then next year, you actually managed to increase the quantity from 10 to 12, and you also increase the prices from 15 to 15.5. So you actually hit 186,000 in revenue. So that's above the KPI that you were targeting. So conclusion, number one, target was achieved. Number two, you sold more candles. So you just remember, you probably had to work more because you had to pack everything and ship it out, unless you use drop shipping. So the third conclusion would be to consider increasing the price a bit more so that you can lower the number of candles that you have to sell to achieve your goal. Okay, the next one I want to talk about is the gross profit margin. So as I mentioned, it's the sales minus the cost of goods sold divided by the sales. The ways to increase the gross profit margin would be to decrease the cost of goods sold. For example, you find cheaper suppliers, you outsource cheaper materials, or you increase sales, or you do both. So the current year, we used again 150 minus the 60 out of the 150. That's how we came to 60%. And then the next year, 180 minus 65 out of 180 is 64. So remember, our KPI, our goal was to hit 65%. So in conclusion, the target was almost achieved, 64 versus 65. And you did sell more candles, but the cost of goods sold went up as well. So less than it would have been unless you found ways to decrease it. I hope it still makes sense to everyone and that they managed to follow. The last one I really want to talk quickly about would be the inventory turnover. The formula is cost of goods sold divided by the average inventory. Why would we want to increase that? Because that's one of the ways to ensure your business manages inventory efficiently. So the higher the number, the better. It means you're selling quicker, because the more inventory you have, if you don't get rid of that, then it's also going to increase your storage costs. If you don't work from home, if you actually rent a storage place for your inventory. So the ways to increase the inventory turnover would be to either increase the cost of goods sold, which we talked about, decrease the average inventory, or do both. So let's assume this year that you had the 3, and then next year you managed to hit the 4. That was the target. So again, the conclusion was that the target was achieved and the cost of goods sold increased, average inventory decreased, which is what we wanted. And that means we sold the candles more efficiently, quicker, and needed less storage space, which means we are saving money, okay? Okay, I hope I didn't confuse too many people with my example. And again, I'm just gonna say, maybe now it makes more sense why I keep saying that it really depends on your specific situation, what the company does, how you manage it, what you're selling. These are very specific types of analysis that need to be done. and whoever is helping you with this, or maybe you're doing this by yourself, really needs to understand your operations. So keep that in mind. So summary and conclusions. So in terms of business structure, as I mentioned previously, this will mainly impact your liability, your tax planning, and the reporting requirements. You can always start small as a sole prop and then incorporate. And even so, again, I always say best to consult with an accountant prior to making that decision, and even a lawyer. Sometimes after a consultation with clients, I actually tell them, this is the way I see things, but I also think you should talk to a lawyer. So really make sure that you spend a little bit of money just to be sure that you're making the right decision for your business, right? The other thing that I keep preaching about is the bookkeeping. Please, if you don't have any experience, just don't try to do it by yourself. This is like the biggest ask that I can ask from everyone today. Either take a course and educate yourself on how to do that, or if you don't want to do that, and that's perfectly fine, just get someone. Get a professional to do this for you. It can be a CPA, it can be an accountant, and it can be a bookkeeper. All of these three people can do your bookkeeping, okay? Again, not doing your bookkeeping the right way essentially means that you cannot make smart decisions about your business, okay? And your business is like your baby. Why would you want to make wrong decisions about your baby, right? Like, you won't be able to determine the KPIs. You can control the cash flow or the income. So guys, please, I'm begging. KPIs, okay. I strongly recommend to set these up as soon as you start your business, and then keep adjusting it, okay? Because you won't necessarily know what you're measuring at the beginning, but at least put something out there so that you can look at that in a few months down the road, in a quarter. So if you're serious about your business and you want it to succeed, you have to have goals and targets and plan on how to get from point A to B and measure it. You just have to. Accountant or CPA, these are, well, I guess some of the professionals, because there are other professionals out there, but I would say these are some of the professionals that can help you identify the KPIs, develop them, measure, and advise on how to keep improving, because they're familiar with your business structure. So like I said, make sure you're doing it with someone who is familiar with your business structure, with the industry, who understands what's happening and what they're looking at. Okay, I hope this was not too much for a 7 p.m. conversation. I guess we can move on, Aisha, to the Q&A. If people have questions, I'll be more than happy to respond, reply, assist, help.
We do have questions, Michelle, and I'm very happy you brought in some very, very key points. People don't realize where they say, like, I've been trying to work at my business. I'm working really hard. I go in the morning, I come back. But what are you doing in between there? Are you doing the right things, or are you only doing the physical labor? What you brought out, having specialized support system, like having a bookkeeper, having an accountant, setting your KPIs. It's just not about the goals. When we have targets and goals in our personal life, how important they are in your professional life, and measuring them. So I always say, set smart goals, set smart goals.
Yeah.
But,
Exactly.
but it's like, sometimes people are like, okay, maybe it works, it doesn't work. Okay, so the first question is, how do you set KPIs for a service-oriented business? Like you were talking about a manufacturing or a production line. So now for services, how do you replicate it? Maybe they want to know a little bit more about that.
Yeah,
maybe you
absolutely.
can stop sharing, Michelle. That's fine.
Oh yeah, I can stop sharing. Yeah. Okay.
Thank you.
No problem. Great question. So I would say for service providers to really focus on the service that they're selling. So what type of service is that? Can you sell it in packages? How are your prices compared to the competitors? We have to look at these ones. Do you have repeating clients or not? Is it like a one-time thing that you're selling? How many channels are you using to sell your services? Like, are you using your own website plus selling through affiliates? Do you have an ebook? Do you sell through social media like Instagram? They have their stores there. So really focusing on the customers, whether they're recurring, maybe you can make them come back and purchase more services from you. And maybe also consider upgrading. So maybe you have like 3 types of packages. Somebody is in package A, but maybe you can actually bump them up to B or C, which pay more.
Yeah, I think those are some amazing, and like you said, it is different for each business. So it is better you consult an advisor like yourself, or get to an accountant or bookkeeper, whichever one suits best for you. Okay, the second question is, does bookkeeping help in planning your taxes in advance? I don't know, like.
Yeah, absolutely. Yeah, if you do your bookkeeping right, which again takes me back to my preaching, absolutely, because if you do it on time and you can see a trend that's happening in your company, then you have an idea of how much you need to set aside for taxes, right? So if you're a sole prop and you're looking and the net profit keeps growing and growing, then definitely start putting money aside before the year ends so that it's ready for April. And if you're a corporation, then obviously you need that. Yeah, no, 100% bookkeeping helps. So there's no doubt about that.
Okay, the last question is, what is the best time to start putting my KPIs in place?
Okay, so as I think I mentioned that in my last slide.
As soon as you start your business.
As soon as you start the business. And the reason I say that, because you have to have some targets in your mind, like you want to achieve things. And I'm not talking about people who are just doing like a minor side hustle, like, I don't know, doing some, let's say, no, you know what, I'm not going to mention anything. Because I don't want to offend anyone. Because what I'm trying to say is that I'm talking more to the people who are doing this like full-time,
not part-time, yeah.
Or people who want to switch their employment with a full-time like business.
Yeah.
So in these scenarios, I would definitely say do your KPIs as soon as the business starts, and then readjust it. Okay, look at it after a quarter. Look at what you've achieved. Does it actually make sense? Is it more than what you were planning? Is it less? And why? Why is it more? Maybe you put too low of a target, right? So that's not good either. And then as you grow, you just keep changing, keep adding, keep removing what is not, necessary anymore. But I would say from the beginning.
Yeah. Okay, there's another one. This is interesting. This person says, I have been in business for past 5 years. In the last 3 years, I've not seen any change. I do my goal settings every year, but I don't achieve them. I don't know where I'm going wrong. Can you help?
Yes, probably, hopefully. I would like to, yes. Okay, so let me start with this. I think that if you're not seeing a change, and it's been 3 years now and nothing has changed, but you were working towards changing it, then something is wrong.
Yeah.
It's either that something is wrong with the way that the bookkeeping is done, and that could be a possibility. And the reason you're not seeing a change because of the way the numbers are actually being inputted into the system, or there actually is no change. And then we have to look at why, like this, your systems, your processes, your operations, like what is happening there. Maybe there's too many people are quitting, or like I said, it's individual, and we have to look at that, and we need to understand what's happening and why is the business not moving. It's been 3 years now. There could be like a million reasons.
Yeah,
So,
I would say, like, setting the goals alone is not important. Seeing every year how you're achieving them, like that is why it's the KPIs, like, key performance indicators. How's your performance been? If you've increased in a particular place, or your performance in a particular area has gone down, what were the reasons? Having those indicators and adjusting them then and there every year is the key. Just setting goals, and at the end of the year you say, okay, I didn't achieve this is not going to work. So
no,
I
mean, and don't get me wrong, it's a good start, but it's not enough.
It's not enough.
It's supplemented, like the vitamins that we take. So think about the KPIs like the vitamins. So
again, it comes down to you're setting goals, but are those goals smart goals? Like, can they be measurable? Can they be relatable? And everything else, like, is there a time set for them?
Right.
All those are so important. And are they achievable? Are you going, like, beyond your ask and beyond what you can do, and you're setting like unreasonable goals for yourself? So,
right.
Yeah, there are a lot of things. Please connect, whoever that was, please connect with Michelle, and I'm sure she will find a way to make it work for you. Thank you so much.
I will do my best.
Thank you so much, Michelle. This was so wonderful. I completely enjoyed the business talk, so I was glued.
Thank you so much, Aisha. It's been a pleasure. This was absolutely lovely, and I love talking about these things.
Yeah, me too. So we can come back again.
Okay, no problem.
Yeah, so thank you so much again for everyone who is watching, and we want to thank Michelle for being so generous, coming on a day in the evening. I know everybody has been busy. World has gone back to normal. You're traveling, you're going to offices. So thanks again. It's a weekday. You must be tired. I won't take any more time of yours. So take care. Have a wonderful rest of the day with your family, and we will see everybody else again next Thursday on Public Allies platform.
Thank you so much. Good night.
Good night.